recorded. Okay. We're close enough. What time do y'all have?
9 o'clock.
9 o'clock.
I'll make a motion to start.
9 o'clock.
I will second.
Okay, roll call. Lamb.
Aye.
Broadbender.
Aye.
And Jones is absent due to prior commitments. I acknowledge we do have a quorum, and I also acknowledge that the agenda was posted in accordance to the Open Meeting Act. Items for discussion: formal appeal of Sandridge Midstream Incorporated, school districts for Medford 154, Palm Creek Hunter, Independent School District 90, Deer Creek Hunter, ISD 95, Kremlin Joint Independent 18, and Timberlake Joint Independent 93. The floor is open.
And my name's Jeff Mills. Thank you all for getting this scheduled and having us out here. Let me go ahead and hand a few of these out here. Signatures coming up here. Yeah, should actually, like, yeah, here we go.
Do we need to share?
I think we should have enough.
Okay.
Thank you very much. And I can give you one if you need later after the fact, or?
No,
Oh,
just
you're good.
memorize it.
Okay. Just want to make sure.
It's like, I don't need any more paperwork than I already got.
I understand. All right, Sandridge Midstream, and I've tried to put this in the best order as I could. You have a summary page there on page 2, and just shows you a little bit of the history of the value here. And you can see from 16 to 17 was a big jump in fair market value from 12.7 to about 18.9. And what happened in the year 2016 is Sandridge came out of bankruptcy. They filed for bankruptcy, came out, and then they rebooked their assets under fresh start accounting. And we've had all kinds of issues with their accounting list, from assets that are bundled up, not knowing what they are, to wrong locations, wrong county. So last year we had filed that. That was the first year that we had that asset listing. We were trying to get more information from Sandridge on where all these assets came from. Unfortunately, 60% of their people were let go, including their property tax department. James Maxwell, and who I finally got the chance to visit with, and he explained how he had came up with his reporting methodology. And it had always been in prior years, this is all kind of electrical equipment, electric lines, power stations, things of that nature. So they would report the power stations at cost, and then the lines would be rendered on quantity, feet, amount of feet, and price per foot of line, and then you depreciate it out and get your value. So we incorrectly filed last year. We tried to get it all straightened up. We got it straightened out in Woods and Garfield, but we never got it straightened out here. We continue to fall back to this fresh start accounting, if you will, this asset listing that, again, we could never verify it. So we went back to how it was filed before bankruptcy and just continued forward. Our issue is trying to get this cleaned up. The prior year values 15, 16, we believe the value should be somewhere in there, minus all the generators and compressors and things that have since been deleted, disposed of, sold. And we're just trying to get it corrected. We haven't added any assets here. So for there to be a value to go up $6 million is just, it's hard for Sandridge to swallow. So we're trying to figure out exactly how to get this corrected. So if you'll flip over page 3 through 8. Basically, these are the different school districts and how we report them. So we report each school district on its own. You'll have the electric power lines on page 3. You have more additional power lines on 4. And then on page 5, additional. You can keep going, additional power lines. And you can see here is where we sold all of our compressors. We got those removed off the list, and Task and the county did get those off, they said. Generators were sold this year. Most of them were out of commission, so the county put it on 50%, which we agreed on that. That's fine. We can't track them. We don't know where they're at. We know most of them are sold, but when and where, and it's just the timing issue there, so we agreed on 50%. Again, you got more power lines. And then we have the Sandy Corner substation on page 7, which is about 3.7, 3.8 in cost. Again, very consistent with last year, or the 2016 and prior years. And then again, more electrical power lines. So we added all that up, and cost-wise, that's about $6.9 million. Again, that's removing compressors, generators, which made up that additional to keep it consistent with prior years of around that 12 and a half, right through there. So again, we're just asking for this to be consistent from the prior years, being that we can't lean on this fresh start accounting listing. We've let the county know that. We've let the other counties as well that we do this in, that we are not using that listing. Tasca agreed to use prior historical filing, and you'll see that on page 9 and page 10. So on page 9, you'll see this is the fresh start accounting. This is the list of assets, and this is what we can't verify what's going into these. This is basically fresh start accounting. You have a Big Four accounting firm that does it behind a desktop. They take all your assets, put a new value on it based off of coming out of bankruptcy, and what they agreed to, what the value is there. And I don't even know if there's an appraisal that's been done. I'm sure there has to be to come up with some sort of value. But this is the listing that Tasca and the county is using. So it's $19 million. You depreciate it out, and they came up with the 17.9, as you see there. I wanted to show as a reference in Garfield County, we had the same listing that we had provided for them, and it's $5.5 million. And you can see we're not using that list in Garfield. I was told that that list is not accurate and shouldn't be used, and so they wanted to use historical methodologies to get to the higher value of $9 million. So it's just consistency. Either the fresh start accounting is accurate and we're going to use that in all the counties, or it's not accurate and we're going to use the historical filing methodology. So that's really all I have on this one for right now, and obviously I'll defer back to the county, but we're just trying to look for some consistency for prior years, being that we did come out of bankruptcy and no assets were added.
Any questions? If not, I'll
Thank you.
All right. Well, hey, again, thanks for your time. Appreciate y'all meeting with us today. My name's Ben Hunley, and I work for Total Assessments. We're a contractor for the county. We do all their oil and gas appraisal work. So, talking about Sandridge Midstream in Grant County, I think the first page, if you go to the very first page, Exhibit 2 of 19, I think we had a similar situation last year. It's where the company has decided to file a lawsuit, and so that case is in district court. And I think we're talking about the same thing today as what we talked about last year. So the case from last year is in court. And so this year, if you go to page Exhibit 3 of 19, this is a letter that we got from Jeff, Merit Advisors, talking about the emergence from bankruptcy for Sandridge, and that they were going to fresh start accounting. I'm not an accounting major. I took a few classes in college, but when he's talking about a Big Four accounting firm, that's way over my head. So I don't know how that works. I really don't. Fresh start accounting, but I can tell you that in 2017, if you look at exhibit, and it's hard to read, that's Exhibit 5 of 14, would be the first page of the rendition from 2017. Is everybody
It looks like that.
on that page?
901P.
Okay.
Yeah.
All the exhibits are down at the bottom. They're page numbered down at the bottom.
In red.
Some of them get in the printed, it's hard to read, but this is Exhibit 5 of 19. First page, this was last year, 2017. As you can see, it's signed by Jeff, or filled out by Jeff. I guess that's your signature down there, Jeff. And this was the asset list that was rendered to the assessor's office. The first page lists all oil field machining equipment. You got a value at the bottom of $18,718,899. Again, that came from the taxpayer. The next page, which is Exhibit 7 of 19, Again, their rendition came from the taxpayer. That's the generators that he was discussing, and that was rendered at $471,000. So with their fresh start accounting last year, that was a reported cost of $19,189,899. Turn to Exhibit 8 of 19. This is rendition for 2018. Again, came from Jeff and the taxpayer, Sandridge. And then we have a list of those assets from page on Exhibit 9 of 19, 10 of 19, 11 of 19, and 12 of 19. And if you'll turn to 12 of 19, he testified we didn't add any assets, we did dispose of some assets, but the asset list, as far as I know, is the same, but the reported cost is quite a bit different this year than it was last year. $6,407,696. Go to Exhibit 13 of 19. So this was Sandridge Midstream's reported cost of value, just a kind of a look-see of what 17 was versus 18. And in 17, they reported a total cost to the county of $19,189,899. This year, that total cost for the same assets, as he testified, $6,407,696. Quite a bit of difference. That's only 33% of the fresh start accounting value that we got last year. If you turn to 14 and 15, that kind of gives you a breakdown of the different school districts for 2017 and the costs that were reported in 17 that we used, and the 18, the revised allocation. Fresh start accounting in 2017, you can see that it was $19,189,000, and then again this year it's $6,400,000. Exhibit 15 of 19. So this is, he said that we had agreed, a phone conversation I believe, or maybe an email conversation that Jeff had with Jerry Wisdom, that we agreed to reduce the generator cost by 50%, and that's where that shows it. Pages Exhibit 16 and 17 are the detailed valuation. 18 and 19 is the summary evaluation. And if you look at Exhibit 19 of 19, grand total fair market value $17,961,659. We would ask the board affirm the assessor's value in that amount, $17,961,659. We heard that the assets hadn't changed from year to year. That's a small decrease from last year. We believe that that's accurate and appropriate. And we'd ask the board to affirm that value, $17,961,659. And I'll be glad to answer any questions if anybody has any.
I'd like to hear a further explanation of the difference between task numbers and the 6 million.
Sure. From my standpoint, anyways, the 6 million now is reduced from the 12 million that it was in year 16, 15. That is to account for generators and compressors that were removed from the tax roll or sold. So that was a large portion of it. The difference between the 12 million in the prior years and this current 19 million is, like I said, this fresh start accounting asset listing that we were provided from the company. So the very first year we filed these last year, we had to go back to several counties and make amended returns to get assets removed. We had assets that were showing up in, say, Alfalfa County that were really in Harper County, Kansas. There wasn't I don't think enough consideration done on those fixed asset listings on location. So we found lots of errors, and that's why we went back and redid them, and with Task and other counties said, hey, let's use this historical listing, because we don't have a good asset listing or an accurate one that details out all of these assets and where they're located. So it would seem to make sense if we started off with any prior year and how it's been valued for years to just do additions and deletions from there. Being that now we have this brand new listing that's not meshing out. And I mean, Jerry said it himself in some of these other counties, and that's why he didn't use that very same listing in other counties, because the value wasn't there. I mean, I just want to be consistent. If we think that's an accurate asset listing, then I would request that, from Task, that they'll use that listing in the other counties. But if not, let's use historical and do additions and deletions. That, to me, seems to make the most sense. He agreed on it in Woods, Garfield, but not this one.
Is it because you sued me last year for the fresh accounting?
No, that's for the covered under gross production. That's what that lawsuit's for.
Yeah, I don't know about other counties. I mean, I'm not in other counties. I'm in Grant County. We used their numbers, their listing last year in their fresh start accounting, and we understand that the company was in bankruptcy. I don't think that's any news to anybody, and we use those numbers, and we just see a huge difference this year compared to last year in the value that they place on those same assets.
That's how we felt last year when we got our assessment, believe me. We saw a huge difference, up 6-7 million from the prior year when we just came out of bankruptcy. We knew there was an issue. We knew there was an issue there. Again, we tried to get that resolved. It didn't get resolved, and we went to hearing on gross production. We still believe these assets should be part of gross production, but they're not, and we'll let the courts decide that. But until then, we're paying taxes on this value, and I think it's ridiculous that it increases $7 million with no additions.
And we're still in litigation on that question, is that
Still in
On the gross
litigation on
production.
that question.
Yes.
And I believe I think he's right. I think it's an answer that we need guidance from the courts. And that's why I asked the board to affirm our value this year and let the courts make the decision. The county will abide by the court's decision, no doubt about it.
I think the courts are going to decide taxability, not value, though.
Of course, we have no prediction when that will occur, the court decision, and that will probably be appealed, and here we go.
Yeah.
Once the hell get involved with attorneys,
Last one of these I was on, you don't have to make a decision today. Is that correct?
correct. Or
But then you'd have to have another meeting.
Mhm.
So do we need to,
Will Ben make a motion on whether I'm sorry, okay.
Oh, we have some.
one of us needs to make a motion there.
Well,
we
they've
have
got some
we have
additional
There's
information.
information in there.
Okay. Let me just go before we make a decision. Let me read his letter that Jeff wrote in 2017.
is Jerry sworn in?
I'm reading the letter.
I know. We're getting messages.
I'd like to read that letter into record. That is Exhibit 3 of 19. Or I don't have to read it. I mean, if you want to take time and read it yourself, that'd be fine with me. But this letter came from Merit Advisors, the tax rep for Sandridge. And it was signed by Jeff.
Yes, it was.
Okay. Upon emergence from bankruptcy, Sandridge applied fresh start accounting to its financial statements and supplementary data. Under the principles of fresh start accounting, a new reporting entity was considered to have been created, and as a result, Sandridge allocated the reorganization value of the company to its individual assets, including property, plant, and equipment, based on their estimated fair values. After multiple depositions what is it?
Dispositions.
Disposition of assets, leases, and prior entities, excuse me for that, but thank you. The 2017 asset listings have changed from that of prior years. With that said, all assets and locations have been rendered with new, as new, with the revised amounts and the 2016 accounting year per the rules of Fresh Start Accounting. All assets have been rendered in their respective counties under the appropriate legal entity. We respectfully request prior year's accounting to be deleted and new accounts be issued in 2017 to more accurately reflect the revised asset listings. We understand this may cause additional work and some confusion. However, we simply cannot tie back to prior year's fixed assets to the revised listing, as many of the values, descriptions, and locations have changed or ceased to exist.
Completely agree with that letter. Unfortunately, we use it when it's convenient. You know, I wish that we could maybe have a copy of this tape and I can play it in other counties too, because I get thrown out with that same letter that says this asset listing, we don't trust the asset listing and we can't verify it and validate it, so we're going to use our historical listing. So I just want consistency. If we're going to use Fresh Start Accounting, let's use it in all the counties you represent and not cherry pick it, because that's not fair to the taxpayer.
Again, I can't comment on other counties, but I can comment on a letter that was written to Grant County on March 15th, 2017.
And there was no attachment of a revised asset listing with this letter, is that right?
I can't speak to that. Jeff would have to say that. All I can tell you is that letter, and then the next document behind is their rendition for 2017 and their asset listing for 2017. They supplied the county as Exhibit 6 of 19 and 7 of 19.
And we filed corrected ones for this year, just like we did in the other counties. So we're trying to be consistent. We're trying to use the same methodology. Yes, at that time, that's what we knew about Sandridge in our first year filing these returns. We had no one to discuss with them, no history on it, and we were able to work with Jerry on some of those other counties to get historical lists, and then we try to do the same thing for Grant County, and now we want to go to Fresh Start Accounting because it's conveniently $7 million higher.
But you did send this in 2017, and it does state that you're familiar with their books and their records, their accounts, and all that stuff in 2017, and it's just difficult to see the value in 2017 for the same assets to be 33%.
Yeah, I completely agree in those other counties too. It's convenient that we pick Grant County.
I know.
Well, that's where we're at. We're in Grant County.
I know, and we argue the other side of
I
the
can't
county.
speak to the
Yes,
other
you
ones.
can.
I
You
don't
absolutely
think
can.
I don't think I was involved in it.
You absolutely, you can definitely speak to this.
I don't, if I had knowledge, I could, but I don't have the knowledge.
Okay.
Yeah, we don't either.
Yeah, I showed the page, the last page there, and how it's done in other counties. So that is knowledge on how other counties and how Task is appraising these. You know, again, with this asset listing that I filed, that's what was given to us with their controller at that time. He has no property tax knowledge. We were able to run through files the best we could and find other pieces of information and work with Task to piece it together. But you know, that same accounting listing doesn't seem to, you know, correlate with the value in the other counties. You know, again, you can say that this is Grant County all you want, but it speaks to how you're valuing. It should be consistent with the same in all the counties that you represent.
And I don't know that it's not.
Well, I just showed you that it's not.
I look at those assets, and I don't see this. I don't see the same the generators, but I think that was a different subject that we took.
But again, This question isn't litigation, correct?
It is in litigation.
It is for the taxability, not value. So we're claiming that overall that these, all assets are part of gross production and therefore not taxable, but until then, we're still paying on a value. So until that gets cleared up, if the courts come back and say, yeah, they are taxable and they're not part of gross production, then we have to pay on that value. So I'm pretty sure the courts aren't going to rule on value. I think the value was the same. I think I'm really not sure. I don't want to speak on that. I don't
Two
know.
questions are related. I without legal representation in the room, I feel comfortable.
Yeah, I would remind you that each year does stand on its own, though. Each year is independent.
No, they're different.
But he keeps saying.
So 1 year won't affect the other.
Any more questions?
The,
I would.
I mean, the
hearing all the
assets are
information,
different.
I would move to affirm the county's numbers, the tax numbers, at this time.
And I will second.
Rob Ender made the motion to affirm the value of $17,961,659 as the affirmed value for Sandridge Midstream in Grant County. All in favor, Lamb,
Aye.
Rob Ender.
Aye.
Motion carried.
17 million, not thousand.
I'm sorry, 17,961,659. Is that right?
That's just the last page. Read that number one more time.
17,961,659. Okay. Motion carried. Now, or the floor is open for Sandridge Exploration and Production LLC on the appeal hearing. Medford ISD 54, Palm Creek Hunter ISD 90, Deer Creek Lamont ISD 95, Kremlin Joint Independent 18, and Timberlake Joint Independent 93.
Thanks. All right, this is Sandridge Exploration. And what we have here is, this is basically a saltwater disposal system, several of them. And this one was argued here last year as well. It's currently in litigation. And we at least wanted to highlight some certain points in case you wanted to look at, again, each year standing alone. But the county and Tasca continue to reference this court case starting on page 3. This was back in the 80s, and this is what is utilized today to assess our property, or at least allocate saltwater disposal. So saltwater disposal systems, they're required by the state of Oklahoma. Anytime you have production of oil and gas, you have to have saltwater disposal systems or the access to them. And so that we believe that the saltwater disposal systems are part of gross production. This court case has clearly lines out that any saltwater disposal system that is required is going to be exempt from taxes that's already paid in gross production, so long as it's not taking in third-party water. Okay, so regardless of really what lease it's on, if it's the same operator taking in their own water, that's part of gross production. That's already paying taxes on that. And I'll point you to a paragraph here on that starts on page 6 and then ends on page 7. When the court says, at first glance, it would seem then that it matters not whether the saltwater disposed of in the Allen number 1. There's 2 wells that we're talking about, 2 leases, the Allen number 1 and the Douglas. So it says that whether or not the saltwater disposed of the Allen number 1 came from the lease on which the Allen number 1 stands, or whether the saltwater comes from the adjoining Douglas lease. The trial court found a difference between disposal of saltwater produced by one's own lease and the commercial disposal for compensation of saltwater generated by another lease. So, they agree that the rationale used to reach the results that the trial courts used was rational. So, what they're saying here is, you have multiple leases, and saltwater disposal systems are it's a closed loop system of pipes and things that go to various production wells or producing wells, takes in that salt water and then goes, we all know what saltwater disposal wells are here. So whether or not those producing wells are on a different lease, it doesn't matter as long as it's the same operator, Sandridge. So they are not taking in third party. They have in the past several years back. That's when they were permitted as commercial, and then they changed them several years back to non-commercial. Once we did that in these other counties, and I wouldn't like to talk about other counties, but we should be consistent, being that's the state that they pay gross production tax in, gets allocated back to the county. We're trying to avoid double taxation. So Alfalfa County, these same assets are exempt. We just got a Board of Equalization ruling in Garfield County this year. They exempted all these assets after being taxed for multiple years. So it's going to come a time, whether it's through litigation or here, these assets are going to get exempt from the rolls, and we would like to help, obviously, with accruals and budgeting and things like that that impact this county. We don't want to be double taxed. They are going to get removed from the roll, and we'd like that to start this year, so we're not, accruing the taxes we're about to pay here and to utilize in the budget. So, anyways, that's long story short. These assets were just ruled as non-taxable, taken off the roll from Garfield. They've been off the rolls in some of these other counties. We're just trying to be consistent and get them removed now. Thank you.
But the court didn't say
Court didn't.
third party, did they? It said from a different lease.
No, it actually says one's own lease and the commercial disposal. We don't do commercial disposal. So it wouldn't make sense for, just because we're on a different lease and we're taking on salt water to a different disposal well, why would that portion be taxable? It's the same company. So what they're saying is you can't just truck in water here for money from another operator and then say, oh, you paid gross production. Of course you didn't. You're actually making money from a different operator that's bringing in that water. But if you're the same operator on a different lease and still taking water into the disposal well, that's not taxable. That wouldn't make sense to tax your own water just because it's on a different lease. They're just closed loop systems that are tying in multiple producing wells, because it wouldn't make sense to have, and nor would you be allowed these days to have one disposal well per producing well. That doesn't happen. It's not economical, nor would it get approved in the state by now. But yes, all saltwater disposal wells, if it's the same operator, doesn't matter what lease it's on, as long as it's not third party commercial where you're compensated. If we like to, here's, I'm gonna pass these out. This is what you did too. Like I said, we just had this hearing a couple weeks ago in Garfield, and that was their ruling. They moved all of those values down to zero. And again, I know this is in litigation, and I know the results of this. I mean, it's none of the other taxpayers have been taxed on their saltwater disposal systems. I know the Chesapeake's not. There's several of them. This is a tight community. We know other operators. We don't think it's right that Sandridge should be taxed on the same types of wells. So, if we can get these removed now and not get these things included in this year's budget, that's only going to help the county. That's all I have.
Here, do we need to share?
Yep.
We can share.
Okay, thanks again, and we have a little bit of a different view. We looked to the courts, not to establish law, but to, interpret law. That's the word I was looking for, thank you. To interpret the law. And so I think some of that was a little bit cherry picked, and I've got some highlighted on the same court case, and we believe that of the saltwater disposal wells that I've been involved with in other counties are valued just like these assets for Sandridge, no different. And And I just want to let everybody know that, because I think you said that it was different for Chesapeake or somebody. I have no knowledge of that. The counties that I have been involved with, and in the saltwater disposal systems that I have been involved with, they are valued and taxed in the same manner as this one is. This is in litigation, and if you turn to page 2 of 44, we're not going to go through all 44 pages. Some of that is the rendition, so don't get alarmed at that. But there is a court case on this same issue, and in my opinion, that's where it needs to be, because we have a Supreme Court ruling, and we have a little bit different interpretation than what Jeff just explained to you. But there's the court case, is on page 2 of 44. 3 of 44 is their 901 rendition and a listing of their assets. And that goes all the way through 19 of 44. I don't think we're in disagreement of the list of assets. But if you'll turn to 20 of 44, and this is the court case that Jeff mentioned. It was in Lincoln County. This is a Oklahoma Supreme Court decision that was passed down in February of 1988. Just a brief, the Lincoln County tax assessor imposed ad valorem taxation on a saltwater disposal well, which previously had been exempt from ad valorem taxation by payment of gross production taxes. 21 of 44. We addressed 2 questions today. This is the Supreme Court. First, whether saltwater disposal is necessary for the production of oil and gas, thereby exempting a saltwater disposal well from payment of ad valorem taxes upon payment of gross production taxes. And second, appropriated on a pro rata basis so that the production of the well used for disposal of saltwater from the lease on which the disposal well stands is relieved of ad valorem taxation, but the proportion of the well used for disposal of salt water from another lease will be taxed on an ad valorem basis. It doesn't say anything about, in that statement, about a third party or commercial disposal well or anything like that. Those are the questions that the Supreme Court attempted to answer in this ruling, and I believe they did answer that. Through that process, of course, it went to the trial court first, and as a matter of law, disposal of salt water is a functionally integrated part of the production of oil and gas, as a result of which the Allen No. 1 qualifies for exemption from ad valorem taxation upon payment of gross production tax. Second, and if you turn to 22 of 44, the disposal of salt water from the Douglas lease is not a functional integrated part of production of oil and gas from the Allen lease, and that the Allen No. 1 would be taxed proportionately as a commercial saltwater disposal well at 9% of the ad valorem tax rate assessed, and in that case it was $675. Let me just explain. So Cumberland operated this system. It was actually 3 wells, 2 producing wells and a saltwater disposal well. The Allen No. 1 and the Allen saltwater disposal well were sitting on the same lease, and what the court said was that the portion of the saltwater generated by the Allen No. 1 could be disposed in the Allen saltwater disposal well and is relieved of ad valorem taxation, that part. But the production that came from the Douglas lease, an adjoining lease, that portion of the disposal was in fact to be taxed ad valorem.
Same producer?
Same producer. Cumberland operated both these properties.
No, that is wrong.
Well, show me where that's wrong, because I've read this thing a number of times and I don't see another operator mentioned. And as far as I know, sitting here today, Cumberland operated both the Douglas lease and the Allen No. 1 and the Allen saltwater disposal.
I appreciate you saying that.
Now, this was not a court ruling that was one-sided. I just want to make that clear too. This was a judgment in the end. When we get to it, you'll see that it was in favor of both parties actually, and to the detriment of both parties in some part. On 22 of 44 down at the bottom, both Cumberland and the county commissioners relied on the home state production versus Board of Equalization case. Cumberland candidly admits that the home state dealt with a water flood system, not saltwater disposal wells, but argues that the test actual and necessary and being used in the production of oil and gas by the court in home state applies to exempt saltwater disposal wells from ad valorem taxation. The county commissioners argued that the saltwater disposal well is a water system expressly excluded by the legislature from qualifying for gross production taxes under section 1001. In the alternative, the county commissioners argued that the saltwater disposal well fails the actual, necessary, and in-use tests formulated in the home state case. Down at the bottom, number 12, while we have herein decided that disposal of salt water is, as a matter of law, necessary for the production of oil and gas, we agree. The question of whether any particular saltwater disposal well is exempt from ad valorem taxation is a question of fact, not a question of law, and depends on the facts and circumstances of the individual case. The second question is whether a saltwater disposal well should be taxed pro rata by ad valorem taxation in proportion to the saltwater disposed of from a separate lease. It doesn't talk about third party, and it doesn't talk about commercial saltwater disposal wells and that stuff. It's just simply what it says, and that's the way we have to take it. It is a well-established rule in Oklahoma. When property is devoted to two uses, one of which is exclusive, but excuses it from the payment of ad valorem tax under gross production tax law, the other of which is exclusive, if exclusive, would be subject to ad valorem taxes, and where the different component parts of such property are incapable of classification according to exclusive use, the taxability status of such property should be determined on a pro rata basis according to use, and the proportionate part of the property that is devoted to a use not connected with the production of oil and gas should be listed and assessed for ad valorem taxation, and the value of the property should be allocated accordingly. The trial court found a difference between salt water produced by one's own lease and the commercial disposal for compensation of salt water generated by another lease. We agree with the trial court's ruling, but disagree with the rationale used to reach it. Here, the disposal of salt water generated by the Allen lease is made necessary by exercise of police power. The state imposes a duty on Cumberland to properly dispose of the salt water generated by the Allen lease. The record is silent, however, that Cumberland is under a duty imposed by the state to properly dispose of the salt water generated by the Douglas lease. And the salt water generated by the Douglas lease and disposed of in the Allen number 1 is not being used or in use for the production of oil and gas on the Allen lease. That proportion of the Allen number 1 not used for the production of oil and gas on the Allen lease is subject to ad valorem taxation. That's what the Supreme Court ruled. We interpret that to mean that if you're operating a lease and you have a saltwater disposal on that lease, the saltwater produced by that lease is exempt from ad valorem in that disposal well. But if you're moving water via truck or pipeline to a saltwater disposal well from an adjoining lease or additional leases, that it should be pro rata, and that portion of disposal should be taxed under ad valorem. And that's what the Supreme Court said. So I mean, that's just what it says. If the taxpayer doesn't agree, you know, it needs to be decided by the court. You know, that's where it is now, and we think that I mean, I don't think that we have the same Supreme Court justice now that we had in '88. So they may see things differently, but we can't act on what might happen. We have to wait for direction from the court.
Where is
There's
the
no
case
crystal
right now?
ball.
I'm sorry.
What court has jurisdiction of the case right now?
District court, right?
Yeah, this is Grant County.
Yeah, it's on page 2 of 44 is the court filing.
Okay.
So then you have a list of all the detailed list of the valuation. If you want to turn through that, I think more importantly, we want to get to the summary page, which is in this presentation is Exhibit 42 of 44, 43 of 44. It's broken down by school district to 44 of 44. And we would ask that the board affirm our value of $49,562,719. I disagree with Jeff. I don't think the courts are going to find in their favor in this situation. I have read that Supreme Court ruling quite a bit. I'm not an attorney, but I can read, and I know what it says. I've been involved in operations for 30 plus years. And I'll be glad to answer any questions if you have them. Thank you.
And also that decision from Garfield County, it just says personal property located in Garfield County. It doesn't say what the assets are.
Sandridge Exploration. So that's fine. We can always, we needed to give the detail we had to, but just one point if I could, or unless you have questions.
Go ahead.
Okay, thank you. On my package, on that page 6 and 7, same court ruling. We just heard that Cumberland was the operator on both leases. I believe that's what they were saying. Again, I just wanted to read this, bottom of page 6. At first glance, it would seem then that it matters not whether the saltwater disposed of on Allen number 1 came from the lease on which Allen number 1.
Excuse me, where are you at?
The bottom of page 6.
The last paragraph?
Yeah, it's underlined.
Okay,
Okay,
just underline
yeah,
part?
just-
Okay, gotcha. Sorry.
That's all right. Came from the lease on which number Allen 1 stands, or whether the saltwater comes from the adjoining Douglas lease. The trial court found a difference between the disposal of saltwater produced by one's own lease. Those are key words here that we need to really focus in. Produced by one's own lease, and the commercial disposal for compensation of saltwater generated by another lease. It doesn't say Cumberland is the operator on both of these. It wouldn't dissect those terms like that and say one's own lease and then another lease. So what it's showing here is that water is being generated on another lease is for commercial disposal for compensation. In other words, Cumberland's getting paid to take in water from that third-party lease. And by all means, I agree that that's taxable for ad valorem all day long, because Cumberland is not paying gross production taxes on that. Somebody else has a producing well that they're paying, gross production on. But that saltwater disposal piece, that is for commercial use. We have a non-commercial well. So I would ask, you say that you are taxing or assessing other non-commercial saltwater disposal wells in Grant County?
I said other counties, the ones that I've been involved in. This is the only one that I've been involved in Grant County. Other taxpayers, I'm assuming that we do have other saltwater disposal wells and they have not protested.
Okay, so Chesapeake is being taxed on their saltwater disposal wells here,
I have no knowledge of that.
but you assess all the saltwater disposal systems here.
Yeah, I'm one person. We have a company that does that. I can't speak to that because I don't know that. I can tell you that the ones that I've been involved in other counties, this is the only one that I've been involved in Grant County, and other counties are assessed and taxed
On
just
non-commercial.
the same way this one is.
I have
Same
not seen
exact
that
way.
yet. But I just want to point out that, again, from this court case, it distinctly differentiates one owned lease and another. So Cumberland is not the operator of both.
I think it clearly stated that, if you turn to page 23 of 44, and I'll read it again. While we have herein decided that disposal of salt water is, as a matter of law, necessary for the production of oil and gas, the question of whether any particular saltwater disposal well is exempt from ad valorem taxation is a question of fact, not a question of law, and depends on the facts and circumstances of the individual case. If you're saying that Sand Ridge is not being compensated, then what I would like to see is maybe lease operating expenses, because normally, in my experience, in I don't know, 25 plus years of operating oil and gas properties, we always, any expense that's incurred, and I think we understand that getting rid of saltwater disposal, getting rid of salt water from a lease is an expense, and that is charged back to that well. And that is a reduction of payment to the working interest owners of that well. And so, in fact, there might be compensation being paid, although it's not being shown, but it's being reduced by the amount of revenue that we're giving the working interest owners of that well.
The same operator.
I'm not talking about the operator, I'm talking about the working
They're
interest
talking
owners.
about the operators. They didn't say anything about working interest in here, or every production well is made up of different working interest holders. The operator is the majority working interest holder.
Those are
And
the facts of the case that I think the Supreme Court talked about.
That says working interest holder? I'm
No,
sorry,
it doesn't
I
say
missed-
it.
I didn't read that.
You might have missed it, but let me
Yeah,
read it to you
yeah,
again.
I guess so.
While we have herein decided that disposal of salt water is, as a matter of law, necessary for the production of oil and gas, the question of whether any particular saltwater disposal well, any particular saltwater disposal well is exempt from ad valorem taxation is a question of fact, not a question of law, and depends on the facts and circumstances of the individual case.
And I missed it again. Where is the working interest? It talks about the operator. It doesn't say anything about the working interest holders. Because we can dissect that all day long. That's why.
Sure, and I'm not a lawyer. All I can do
I
is
know.
read what it says.
Yeah, and I still did not see working interest in there. I'm sorry.
But it doesn't say operator either. It talks about the facts of the case, and I think that's what it's talking about.
Notice our fresh start accounting list wasn't used in this one. Imagine that.
I would ask that the board affirm our value. This case is also in court, and I think certainly from a valuation standpoint, we would like to have it resolved too, because we're treating this taxpayer like all other taxpayers
That
I am aware of. That I am aware of. In cases that I've been involved in, it's exactly the same. And we need direction from the court, because I think this Cumberland case is exactly the same thing that Sand Ridge is presenting now. It's the same case, and I think that I can't certainly go against any Supreme Court of any state.
I don't think
I
you are
can't
going
do
against
that.
the Supreme Court, like you said. If you want to throw it to this court and let them rule on it and tie up another year's worth of taxes, that's your call. You say your counties that you represent are taxing them. Well, again, we've got the Garfield decision. We're not being taxed in other counties that you aren't representing. So they interpret it differently. It's confusing. I know. That's all.
Are there cases in other counties that are under litigation? Do we know that?
I don't know that for a fact. I know he mentioned the Garfield Board of Equalization. He mentioned that because I think that's the only one that ruled in their favor. All the rest of them
Well, we only have one other
decided.
one.
Huh?
We only have one other
Oh, is that
one.
the only one? Only other one? Well, I've been involved in other ones, not with Sandridge and not with Merit Advisors, and those were decided in the in the assessor's favor or affirm the assessor's value. And I have no knowledge of any of those going to the district court. This is the only one that I know of that's going to district court.
In another county in Oklahoma, Alfalfa, it's a different appraisal group that works that county. Their rule of thumb for it is once you're permitted commercial, it's taxable. If you're permitted not commercial, not taxable. They take the assets off the roll, and that's exactly what they did once we got permitted for not taxable, and that was way back when. They've been off the rolls there for years.
Okay, so they've been on the rolls here for years, but
Right.
once
They
Merit
were-
took over,
Yeah,
all
they
of
were
a
on
sudden
the-
they're non-taxable?
No, actually, that we believe they're taxed incorrectly, and we pay it under gross tax. They've been on the rolls in Garfield for years too, but that board ruled to take them off or put the values down to zero. I understand it's frustrating because especially when they've been on that roll. Sandridge has never fought it in years past. And they filed bankruptcy. They cut 60% of the workforce, so they're struggling. But hey, if this needs to go and let the court rule it, we want to be good corporate citizens here too. Sandridge does. They pay their fair share of taxes, but if they're doubled up, that's not fair either. In that case, they would have been paying years and years of taxes in error.
Well, I think in this case, they'd only be doubled up is if the disposal of the salt water from that lease was being taxed.
In your opinion.
And that's, in my opinion,
Well, yeah.
and that's not what's happening.
Yeah.
The only portion that's being taxed is coming from other leases.
Right, Sandridge operating. That's the pressure part. That's just Sandridge is the operator on all these wells, and it doesn't matter what lease it is. Why would certain portions of that salt water be taxable for the same operator?
Because I think that's the ruling that the Supreme Court handed down.
Cumberland sounds like to me, but I'm not an attorney.
I know it's just. Logic's just got to kick in. It's some time where you're thinking, oh, it makes sense if you're taking in from a third party that's not yours. Absolutely tax that. I understand that, but if you're the same operator, why would a portion of your own be taxed and the other?
But the court case doesn't mention a third party. And it just doesn't.
It does.
Where?
It does.
Where does it say
it doesn't,
third party?
One, it doesn't say working interest holder at all. The two,
I
it's
know,
the same thing. It's
The working interests are part of the facts of the case, and that's why it has,
but it doesn't say it. It doesn't say
that
it.
is a fact of the case, and I think there are other facts of the case that have to be considered, and I think that's why it was ruled. That's why the Supreme Court rules that way.
I don't want to repeat ourselves. I know you guys have whatever information. If you have any questions, please let
It
one of us
is
know.
I believe it's a subject that needs to be clarified more now than before, but I don't think, certainly, we can't go against what a Supreme Court ruling says, and that's the way we interpret that ruling. So that's how we have to do that. Thank you very much for your time. Appreciate it. I don't know if I even do it again, but we've just asked the board to affirm the assessor's value of $49,562,719.
Mr. Chairman, based on the information I've heard and the fact that we are still in litigation, I would move to affirm the assessor's value of $49,562,719.
I second.
Broadbender moves, Lamb seconds to affirm the assessor's value of
$49 million.
$49,562,719.
It's just a big number, I know.
Exactly. All in favor? Lamb?
Aye.
Broadbender?
Aye.
Motion carries. I snuck in some excise boards. Do you all need to take a little break, or do you want to, it won't take long to do the stuff I need?
I'm good.
Do you mind if I step out, or do I?
No, you're good. You're good.
Thank you all
Thank
very
you very
much.
much.
Yep,
It's a
good.
pleasure meeting you all.
Nice to
Thank you, Jeff.
Nice to meet you too.
Thank
you.
Thank you, Jeff.
Yeah, good seeing you.
You too.
Thank you, sir.
Okay, now to the excise. We don't,
Thank you very much.
See you again.
Yep.
thanks,
Thank
Ben.
you.
Thank you.
Okay. Now we're to the excise board agenda items. Transfer of appropriations.
Oh, you
What?
got another meeting.
I just need, if you would,
Yeah,
to
you
acknowledge
get to
the
go, huh?
transfer of appropriations.
Thank you, guys.
We'll see you, Robin.
And the last sheet's just a thing just showing, I've just started putting this in there to show that we put it into the system. We have 3 transfers of appropriation. If you're okay with that, I need you to initial
Initial by the,
by the amounts, please.
no signature.
No.
Don't need initial to or just change.
You can, it would be good if you want to, that'd be great.
I can do
The
There
more
you
the
go.
merrier.
Oh, yeah, all right.
Really?
Yeah.
Okay.
So do we have a motion to acknowledge the review and approval of the transfer of appropriations?
I'll make a motion.
Second.
Lamb moved, Broadbender second to approve and acknowledge the transfer of appropriations as presented. All in favor, Lamb?
Aye.
Broadbender?
Aye.
Motion carried. We have one, the reason I have monthly appropriation on there, we had one account that had to be established. We were trying to get things worked out doing the treasure. So this was a monthly appropriation. I just thought I'd go ahead and get it run through so I can get it. And what it is it's on the general fund, and it was a 50% movement of $500 into M&O for, gosh, I gotta remember what it is now, $3,000. I think it's, let me find oh, it's for not DCR. Is that right? Sheriff's Commissary. That's what it is, I believe.
For Sheriff Commissary.
That's what I just handed it to Jerry. It's this right here. It was a $500 50% money movement for end of year. It should have gone in last
I
month.
see.
So do we have a motion to approve the $500 monthly appropriation? That's just my sheet that goes with
I'll
this.
make a motion.
I will second.
Lamb moves, Broadbender seconds to approve the monthly appropriation for $500. All in favor, Lamb?
Aye.
Broadbender?
All right.
Motion carried.
You can make a motion on those $49 million ones.
Yeah. Lots of money, isn't it? Okay, now we have the treasurer's allocation of alcoholic beverage tax for May, and that would be those two right there. And I think you just have to acknowledge them. And then, so do we have a motion to acknowledge the treasurer's allocation of alcoholic beverage tax for May of 2018?
So moved.
Second.
Broadbender moved, Lamb second to approve the treasurer's allocation of alcoholic beverage tax for May 2018. All in favor, Lamb?
Aye.
Broadbender?
Aye.
Motion carried. Now we have the alcoholic beverage tax for June. To meeting acknowledged, and it is $9,387.26. We have a motion to acknowledge the treasurer's alcoholic and allocation of alcoholic beverage tax for June 2018.
Your turn.
I'll make a motion. I'll get the little ones out.
Seconded by Broadband. Okay. Lamb made the motion, Broadbender seconded to approve the treasurer's allocation of alcoholic beverage tax for June 2018. All in favor, Lamb?
Aye.
Broadbender?
Aye.
Motion carried. Now we have the mortgage certification fee for May. The treasurer's, let's see, May's is
I think I just signed that.
$80. Do we have a motion to acknowledge, I guess, are you approving? I guess approving the alcoholic, the mortgage certification fee appropriation for May. Do we have a motion?
Yes, I moved.
Broadbender. Do we have a second?
Second.
Broadbender moved, Lamb second to approve the treasurer's mortgage certification fee appropriation for May 2018 for $80. All in favor? Did we already do that? Lamb?
Aye.
Broadbender?
Aye.
Okay. And then we have the mortgage certification fee for June, which in the amount of $120. Do we have a motion to approve the treasurer's mortgage certification fee appropriation for June 2018 for $120?
I'll make a motion.
A second.
Lamb moved, Broadbender seconded to approve the June mortgage certification fee of $120. All in favor, Lamb?
Aye.
Broadbender?
Aye.
Motion carried.
This needs initials, is that correct?
I think I just have to acknowledge
Okay.
that one. Yeah. I mean, oh, here, this one right here. I'm sorry. It's that one right there. On the 120. Okay. Do we have a motion to adjourn?
So moved.
Second.
Broadbender moves and Lamb seconds at 10:07 to adjourn. All in favor, Lamb?
Aye.
Broadbender?
Aye.
Motion carried.